We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelmingly on gold's side.
That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Jim Paterson, one of the principals at the Discovery Group and the CEO of ValOre Metals. Thanks for joining me today, Jim.
Hi, Tom. Thanks for having me.
Excellent to have you back. So the last time we spoke, you admitted that you didn't know much about silver. So has the last year brought it more into your view?
The only conversations I've had are with people like Chris Marcus of Arcadia Economics, and he has some very strong opinions. But as we discussed last time, I tend to stick to my wheelhouse. So if it were a silver exploration project, I'd be probably more interested than actually diving too deeply into the actual silver markets or the commodity markets.
So how have the precious metals become even more precious over the last year to you?
I just think three words, massive money printing. The inflation that I think we're going to suffer from in the next few years is just going to be is a deluge of paper. And I think hard assets and specifically precious metals will perform very well and be very fitting for their name, very precious.
So you've been investing in the junior space for 24 years now. So can you share with us some of the biggest lessons that you've learned that really stick out in your mind, Jim?
Yeah. I think you need to be constantly investing. I think I prefer to invest in myself and the teams that I work with. I think when you actually put money on the line, you pay way more attention. You're much more conscientious. You're asking more questions. You're learning a lot more. And hopefully over time, even if you make considerable amount of mistakes, hopefully you'll learn from those mistakes. And even a mistake in a cyclical bull market or a raging bull market may be overlooked. A mistake in a bear market can be catastrophic. So even the same mistake at different times or points in the cycle may have a totally different outcome. So luckily, in my case, I've made the same mistake many times, sometimes at the top of the cycle and sometimes at the bottom. And that is very instructive and educational. And over the last few years, what I've found most of all is that I've focused the teams that I've been working with, and those team members have become very, very good over time at what they were brought in to do. So our results are a lot better, and which means we actually get more attention, we get more deal flow for people that are looking for teams or projects to advance, teams or money to advance their projects. So when you have some success, it does build in itself. It's a virtuous cycle. And you start to, your team is more cohesive. You're more attractive to capital. Capital always wants to find the best home, the most productive home. And the best investors find the best teams. And then those people that hold projects will seek out the successful group. So suddenly your quality of opportunity starts to really increase and improve. And that really starts to build in itself. So when you're having a real tough go of it, the world isn't helping you. But after you prove that your worth or your merit, suddenly the world starts helping you, which improves your returns.
So as you're talking about making the mistake in a bull or a bear market, having that, let's say 24 years of experience, Jim, can you give us some perspective on where you feel we are in that cycle right now? And if you're able to make a couple more, let's say the market is more lenient to you right now, or if you're waiting for, let's say, higher metal prices?
Well, I don't know where metal prices will go, although I have a strong suspicion that precious metals prices are going to really move at some point. And obviously, if there's a massive infrastructure build out across the world based on massive money printing, other commodities might benefit greatly as well. That being the case, then the one risk that I think we have is that when there's too much money and not enough high quality projects, what happens is very low quality projects and low quality management teams get financed. And that is always a recipe for disaster. and billions of dollars will be vaporized in the ebullience that you find yourself in if commodity prices really move and big generalist investors start pouring into this space. It's a small sector, so then the quality of those projects really starts going down that receive funding. What was your specific question again? I lost it there.
Kind of give us some perspective on where you think we are in this cyclical bull market, basically.
Yeah. So yeah, I guess I was on the right track. So that does happen. So I think what you really need to be cognizant of as an investor is that you're going to get some pretty good marketing sent your way that extols the virtues of projects. And I think you really need to look at them and say, why is it that they didn't work when the bull wasn't pushing this along up the hill? You know, what were the things that were holding that project back? And if it was a lack of capital, well, obviously that won't be the problem now. If it was a poor management team and now there's a different management team, well, that problem may have been solved. If there were other issues involved with the project, like, you know, it was in a national park, or the metallurgy didn't work and there's no solution that's being provided now to fix that or remedy that metallurgical issue, it's not going to work out better. And in fact, you're going to lose all your money regardless of what the bull market's doing. So, I'm certainly, I certainly have more money in bull markets, but I do think it's fleeting. I do understand that even in bull markets, I can lose it all if I don't make good decisions. And in fact, when the market does turn, if it does in a short period of time, you know, you're really left exposed if you're not being very careful with your money.
So something you've spoken about in the past, Jim, is the importance of having board members in your companies that have CEO experience. So why is this so important to you?
I just think it's such a better interaction, and they give you such elevated feedback based on experience. Because the reason why I say CEO, it doesn't necessarily have to be a CEO of a major company, but it's somebody who has accountability in their position. And so whether they're running a consulting business where they're in charge of paying people, hiring staff, of budgeting contracts, and actually have customers, maybe have other board members themselves, they'll have a totally different way of communicating with you when they're on your board, because they have experience, they've made mistakes, they've dealt with angry customers or shareholders in their past when they make a bad decision. So they recognize that there are these shades of gray, black, white, and gray in the middle, and it isn't perhaps always clear what the decision will be, but they're going to provide you really good guidance. Now, if they have never been accountable, and there may be a figurehead type board member where they're a professional board member for fees only, and based upon the fact that they wrote a paper on copper, let's say, and they're a university professor, they haven't really been in the breach. They haven't been tested by multiple forces that can ruin them or potentially ruin them. So they'll have a totally different attitude. And, you know, you can't always have that, but you really want a substantial amount of your board to have that kind of experience, in my mind.
Interesting. So you were talking last time about raising equity at non-dilutive pricing, and I was wondering if you could explain this to us further. How do you raise money without diluting?
You can't raise equity or sell shares in your company without diluting, but you can, if you do it at a higher price, obviously dilution will be reduced. So, you know, if you have 100 million shares outstanding or 10 million shares outstanding, and you want to dilute by 10% to do something project related, let's say, if that price is higher, or if you have to issue less shares for the same amount of money, evidently the existing shareholders will be diluted less. They'll own more of it when you accomplish your goal.
So one of your projects is focused around PGEs, Jim. Does most of your demand, or where does most of your demand come from for that?
Well, for palladium specifically, over 80% goes into the catalytic converters, and platinum, it's a little over 50. So, but both of them are very industrial type metals, even though they are called precious metals. So there is that investor component of it, where those that may think that palladium or platinum are trading, are better value, let's say, than gold, would still perhaps be comfortable buying platinum bars or palladium bars. So there is that. there are those investors who like the precious metal space that may dabble in palladium or platinum. But for the most part, there are very specific industrial uses for the metals. And what we've seen recently is that with the massive push for projects to exhibit ESG characteristics, so environmental, social responsibility, these things are being these metals, palladium and platinum, obviously lithium, things like that are being positioned as the way forward in terms of electrification of the planet, and also specifically in the auto business for palladium and platinum, they're using catalytic converters. So those are the primary purpose of catalytic converters in automobiles are to reduce noxious fumes going out of cars. So as environmental policies become more and more restrictive, you get a higher and higher loading of palladium and platinum for every catalytic converter or every car that is produced in those countries that are paying more attention to the environment, paying more attention to the air that their citizens are breathing. So that obviously the demand in a fairly small market for palladium and platinum are, it has huge effects. It really jams demand.
So as you're talking about demand, Jim, can you paint us a picture of what you've seen over the last year? Obviously, we saw, there was a lot of shutdowns over the last year. Have you seen your demand really fluctuate?
Well, as we're an exploration company, we're not really in the mix of selling the commodities like palladium and platinum. We have a uranium project. We're not selling those things, but the demand would be, in our case, most relevant in terms of the investors that are following our story, following our company. And over the last year, there's been a massive uptick in those that like the uranium market. So they're following ValOre for our Angelac uranium property in northern Canada. And then obviously palladium and platinum prices have moved substantially, as have rhodium prices. And those are all PGEs or platinum group elements. Those investor bases, I think, are really growing because they're seeing those prices of those metals really move over the last year and a half, 2 years. So I think the demand has increased dramatically from an investor point of view. And I would think that in the case of palladium and platinum, they really are highly concentrated in terms of where they're produced in the world. And they're also highly concentrated in terms of the number of companies that own the lion's share of the production marketplace. So to give you an idea, in palladium, for example, I think about 85% of the palladium comes from 3 countries. And those 3 countries are Russia, South Africa, and Zimbabwe. And so I would argue that looking at the global perspective, those are countries with some jurisdictional risk. In addition to that, there's a high concentration of just production. So on the palladium side of things, again, about 85% of primary production of palladium comes from just 5 companies. So there's real concentration in that. When that happens, fluctuations have real torque in terms of demand or supply. So, if you got real concentrated supply, if you get a massive demand kick, you get price spikes. And conversely, if the demand dries up, prices just bottom. So, that's different than the gold market where there's gold production from many, if not a majority of countries out there. There's some form of gold mine, or maybe by continent, but palladium and platinum are really concentrated.
As you're mentioning the uranium market, Jim, considering that the price has come down even further since we last spoke, how do you look at holding this large uranium project during times like this?
Well, I've been beaten enough that I finally, I think have some wisdom. So, we acquired our project in 2008. So I'm not a Johnny-come-lately to the uranium market. I have definitely been involved with the uranium project for a long period of time, and I've seen price fluctuations. And in 2008, from 2008 to about 2010, the prices really moved fast, and investor interest increased dramatically, and it kind of peaked in the end of 2010. And it peaked maybe more in terms of investor demand, maybe in January 2011. And then it sort of started coming off a little bit, but that was then exacerbated by the tsunami that created the Fukushima disaster. But it was basically an earthquake, and that earthquake caused far more damage than the plant itself, the Fukushima plants. But it shut down the Japanese nuclear business, and it's never recovered. And after that point, after March of 2011, it really hasn't recovered. There have been times when investor interest sort of spiked, but the price went from 70 in February, I guess, of 2011, down to in the 20s, below 20 for the spot market. And we're only at 30 now, so I think that, I guess I'm just the old bull here. And I have an asset in the form of Angelac in ValOre. I'm not going to rush out and get kind of pushed around by people that are excitable. I think we need a sustained move, and that sustained move could happen at any point with a market like uranium. Like, the prices can really move when they move, and they can move from 30 not to 33, but 30 to 80 or 120. It's happened in the last little over a decade, that kind of move. And when that does, we are ready and willing to take advantage of that marketplace. And we have a great asset, so I don't need to chase it or go out and acquire other assets at this point.
So what would the ultimate goal for the project be? Would you want to take it into production or have somebody take it over, and why?
I think that our strong suit as a group is de-risking and showing massive upside in the form of mineral exploration. So really good, solid science. And I think what we have in all the projects is we want to have projects that, as we succeed, we start to build out that clear picture that we have a district. And mining districts are the types of areas in the world where the senior mining companies, the big producers or multi-commodity producers in the mining space, if they're going to set up shop, they're going to do it for something that's multi-generational in terms of that production. So our job is to present the information in a way that it's blindingly obvious to them that it's worthwhile developing the asset.
And is a lot of those considerations, partly due to logistics and also exploration upside?
Yeah, those two would be major considerations, and just a jurisdictional perspective. So from a political perspective, from an environmental perspective, the logistics, access, infrastructure, ease of getting the product to market, and then the whole geological framework has got to be good as well. What you want is productive and high grade deposits that can produce product at a margin. And obviously big companies want margin at scale, large scale, and they want it to last multiple commodity cycles. So they don't want to be in a project that they mine in 5 years and completely exhaust or deplete the resource, because the risk is they are producing that material. It takes them 10 years to get into production, let's say, and they're producing for 5 years. And if they're unfortunate, they only get those 5 years at the bottom of the cycle. What they really want to do is develop the asset to produce initially into a top of the cycle, and then be able to ride the bottom of the cycle, and then and pay back all their pay back all their infrastructure, and then be able to ride out any kind of dip in a cycle, and then actually take advantage of another move up in the commodity prices to continue off and be sustainable. So there's a lot that goes into these big companies and how they make their decisions. And certainly they want something with longevity, a sustainable project where they can invest heavily up front and control the entire district and all the mining there and all the exploration upside for growth, but produce minerals for many decades.
In a way, they want to look at having a project that they can dollar cost average over, let's say, 10 plus years, right?
Yeah, and exactly. And their access to capital, they got, their cost of capital would be a lot cheaper than for a junior. If you've got a $40 billion enterprise, if you would like to raise in a combination of debt and equity $2 billion, that is, proportionately very small compared to the rest of your company. If you are a $40 million market cap junior, a $2 billion capital raise. We got back to that topic we were talking about on dilution. You know, that is, it dwarfs the size of your company. You're obviously, it's a David and Goliath scenario, and investors don't like that. They like it to be the other way. They like the big companies to be taking the bigger risks.
So has anything changed in your view in the uranium space over the last year, Jim? You know, we keep seeing more mine closures, dwindling supply, large demand coming in, large demand coming in the not too distant future, yet we're still here at the $30 level. So what do you think has changed in the last year?
Well, I think one thing that I'm just so heartened to see some of the players, and I will commend the management teams of those explorers and developers in the uranium space. They are very forward thinkers, and a lot of them have sort of taken their future into their own hands, where they're raising money and they're actually buying physical uranium or spot uranium in the spot market. And I just think that is such a brazen move, and I commend it, because it is, you know, you're not sitting back waiting for the world to deliver you something. You're actually standing up and making the change yourself, and that's what they've been doing. That's a big change for juniors to be raising money, or, you know, even some of these commodity players in the uranium space are able to access capital and they're buying product in the market. That's a very positive thing that's happened, and that's a more recent phenomenon, I would say, that there are that number of players. And then secondly, Cameco, who I would encourage all of your viewers to take the time to actually go to the Cameco website for their quarterly financial updates. Listen to that interview. They always put together a really good presentation, and they explain the market and they explain what they're thinking. And really, they're the big player out there. They're integrally involved and driving the marketplace. And for the longest time, they'd shut down they'd shut down their Canadian production, and it was a big chunk of the global production. And then they were actually, not just had they shut down production, but they are actually a buyer in the marketplace. And that got me so excited when I knew that they were in there sucking up inventory at cheaper prices than the long-term contracts they had to deliver into. So they were still making money. So it was a sustainable exercise, but they were basically vaporizing supply out of the market. And I thought that was so beautiful. Recently, they did announce so that they'd be moving back into production at Cigar Lake, which is a pretty substantial producer. So, you know, I thought I was dismayed a little bit, because I thought, you know, it's not, the price is still in the 30s, as you said, and I would think that they could have waited a little bit longer. But that's just me, you know, armchair quarterback. The guys that run Cameco obviously are really involved in all aspects of the business, and perhaps they see that the price will move, or that the utilities or the buyers are going to be forced to sign high-priced long-term contracts at a good margin for them, and they're just saying, we got to get back in the market and deliver it for our customers. And every kind of negotiation is different, but what I learned in the past, that there were some utilities that would negotiate contracts with uranium producers or uranium developers, and they specified in the contract that they would buy a certain amount of uranium or U3O8 from those producers, but only from their mine. What they wanted to do was encourage that producer to get into production and help them stay afloat, to give another source of supply for those buyers. And what they didn't want to do was sign a contract and then that mining company not be a mining company, just stop and actually go into the market, buy at a lower price and dump it on them, when they could have done the same thing themselves. So, I think that's one thing that I was frustrated in, and have been, is that the utilities out there should be working as hard as they can to encourage the development of really good projects. And I think that there's been a lack of capital in the uranium sector since 2011, and has completely stopped exploration. For the most part, there's been very little exploration globally relative to other commodities, and that is going to come home to roost.
As you perfectly put it, that's going to come home to roost, Jim. It seems like there's so many factors here building up that are really, when the dam breaks, it's going to really push prices up, I think, right?
Yeah, and based on prior history, we can't say that will always dictate future performance. But in this case, I think the uranium spot price is the type of commodity that can gap. I remember when it moved from $40 to $70 per pound in about 6 or 7 months. That's a big increase, particularly the effect that it had on the juniors was staggering. And I know others that have been on your show talk about those numbers, those increases. But if you held the uranium company in mid 2010, you were, if you were early, you were one of the only buyers. And then by the end of 2010, it was just massive influx of generalist buyers trying to get it as much as they could. And prices of those stocks were up 10 times.
So, Jim, is there anything in the pipeline for ValOre coming over the next year?
100%. With our Palladium Platinum project in northeastern Brazil, we are moving very quickly on the exploration front. We've got an amazing Brazilian team. We've got a great team that is moving the project along in terms of understanding on how we would develop the project. But we'll have 3 drill rigs running, I think, by near the end of May. We'll have 2 core rigs and an RC rig. And then we're employing large crews doing soil sampling. And then this really cool little instrument that we have. It's like a little mini drill. It's an auger. It's called a trado. And we can get down to about 10 meters or so. But really what that is, it's an advanced scout just testing all these targets very close to surface. And if we like what we see, then we've got the RC rig that can come in. And then if we really want to build resources, we've got 2 core rigs that should be starting up pretty soon to build a lot of resources. So yeah, we've got 6,000 meter program on diamond drill core side, 2,000 meters to start with the RC, the trado, full team. The news flow should be substantially higher than last year. And we were doing, I think, 2 releases a month last year. I think this year is going to be pretty crazy.
Excellent. So
yeah.
Jim, you're one of the principals in the discovery group. So can you explain to us how that works and how you guys really work together to help each other and kind of give each other feedback?
Yeah, it's dynamic. It really doesn't work a certain way. That's the beauty of it. So John Robbins, who's the rainmaker and the head of this group, gives everybody in the group, I think, a platform, but he really looks for independent and highly competent people. And independent and highly competent people don't like to be told what to do. So that's perfect. And luckily we're aligned though in terms of integrity and a real focus on quality, not only in people, but on assets and capital partners. So we have this platform called Discovery Group. And, there really aren't a lot of rules, so to speak, other than, incredible integrity, high levels of corporate governance, capital discipline, a focus on the science. And I think if you really and focus on ESG, we're really pioneers in that. Before we were told that we had to do it, we were just naturally and intuitively doing it on a project by project basis. So I think that is great for reputation. And then from a practical perspective, one of the things that we really leverage is when you have really good people, that means you get really good deal flow, and then you get access to capital. But we also are able to kind of negotiate. There's economies of scale. So, we minimize corporate overhead and burn because we share a big office, a couple of floors in Vancouver, and then we have a lot of people that work around the world. But, we have one sort of center here. But also think about, if we've got 9 public companies in the group, and 2 of them are royalty companies. So those aren't really out in the field, but the other ones need to buy stuff every year. Like they need to negotiate with geophysical contractors, drilling contractors, bankers, lawyers, so we actually together, if we work effectively together, we can reduce all those costs and buy in bulk, so to speak, or at least be a group that service providers really want to service well and pay attention to and deliver premium service to. And that's helped us a lot. So not only do we have really good people that work internally and attract really good board members and really good managers and staff, but we also attract really good service providers that deliver excellent project after project after project, financing after financing after financing. And that helps us a lot too.
Interesting. So it's the dynamics of working together like that help streamline, let's say, all aspects of the business, right?
Well, it's balanced, right? I mean, as I said, we're independent and competent, so there's no ruling person saying thou shalt do it this way. It's more like, hey, this is a system that may benefit you and your shareholders, and we'd love for you to participate. And if it's something that's beneficial, there gets uptake across the group. And really, it's a great litmus test, because if it's a service provider is presenting an idea to one company, we can turn around and ask all the other companies what they think. And we get great feedback. We say no to a lot of things because of the experiences of the different Discovery Group members. But when we say yes, if it works for one and improves their business process somehow or increases their access to capital, the others can benefit as well. And that's happened. And the other thing too is, we're able to attract really good people that may leave a big organization that wouldn't want to go to a little tiny company. They feel more comfortable jumping into the group, even if they're just focusing on that one little company. They feel the group gives them a little more security and profile and credibility.
Excellent, Jim. Is there anything you'd like to add as we wrap up here? Anything that's on your mind?
No, I just like the opportunity to talk. I know it's a crazy time right now for everyone around the world, and these kind of interactions I think are critical. And I think I'm out looking for information on how to navigate forward, and I would love to hear from anybody out there who's got a way to increase their personal liberty or improve their finances or reduce doing something that isn't positive for them. Any kind of feedback or input on living a better life and being a better person, I'm willing to listen to.
Excellent, Jim. Where can our audience find more about you?
ValOreMetals.com. VALORE metals.com.
Perfect, Jim. Thanks so much for your time today.
Thanks very much, Tom.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.